Good morning, everybody. Hey, welcome to Thursday. The week's almost over. It is April 22nd. I hope that you are doing well, and this video finds you doing well also. So, hey, before we get started, a lot to talk about today, a lot of earnings coming in when it comes to the airlines. A lot of airlines coming in today, as well as some companies that you and I use every single day. So a lot of news coming out. The question is, what will futures do? What will the market do today? We had a little reversal yesterday, ended up in some green territory. So that was good. But the thing that I know I harp on a lot, folks, and that's what is your risk? How much risk do you have in your current portfolio? Because who knows what could happen in this market? We are still bumping up against all-time highs, and you need to know what that risk looks like within your portfolio. That's why I developed the financial x-ray. Give us a call at 863-382-0037 to schedule your financial x-ray, or go to our website at statlerfinancial.com, and there's a link to our calendar right there where you can schedule an appointment directly with me. Hey, Dave's coming up next. We've got lots to talk about today. Glad you were able to join us.
Point 7 Light FM. This is the early morning show, aptly named because it starts out gosh darned early. We're at 8:39 now, 21 before 9. Let's check in on your money and see how Wall Street's treating your retirement fund. Did pretty good yesterday. Let's check in with Phillip Statler from Statler Financial Services and see if we can keep the momentum going. Phillip, good morning. How are you today?
Hey, good morning, Dave. Doing well today as we kind of not closing up the week, but one more day left. And hey, earnings season is in full force. We got a lot of earnings to talk about today. And hey, even you get a little macro thing to talk about.
Well, doggone it all, I was really starting to feel left out of the party for a while in there. Setting the table this morning before we even get to the current reports today. Yesterday, we finally turned the corner and swung back up again. Dow was up by 316. That's the better part of a full percent. Standard & Poor's was up by 38.5. NASDAQ recovered up 164. I was kind of out of the loop yesterday, but I didn't see any news items that would have generated that. My kind of read is, okay, fine. Maybe investors decided that it wasn't quite as owly a situation as they were thinking for the first 2 days of the week.
Well, yeah, I'm not sure. Maybe they felt like, or maybe the program traders felt like, hey, we've two days down. Yesterday we started out the day down, and then towards I don't know, the middle of the day, we saw it turn around and head back green. So maybe they just hit some target numbers and the program traders picked back up.
Yeah, it was kind of inexplicable as to why, because there really wasn't anything generated that did that, except for it just to be novel about it. No bad news during the day.
Well, that's true. We did not have any bad news, and there was no macro stuff really came out. Oil inventory came out sometime late yesterday afternoon, and I haven't seen really what that number looked like either. But I guess that could have put some pressure or could have helped the market somewhat yesterday.
Could have, because I was looking at oil prices and I didn't see the inventory number itself. We're down to a little bit more manageable crude oil price this morning, so maybe the inventory report helped that a little bit as well. Start out with the news out of the economy this morning, the unemployment news that they put out every Thursday morning. First-time jobless claims last week, only 547,000. That's still more than a fully functioning economy, but that's where you and I were noodling it through at least 2 weeks now in a row that we've had first-time claims under 600. Not only is it a pleasant surprise, but there's a psychological benchmark there too, isn't there?
Well, there really is. And I think the other thing too, David, is if we look at this number, I think this is probably the lowest number we've seen since the pandemic started, because I think last week we were in the same boat. It was 586,000 last week. That was the lowest number we had seen. So it is a good sign that we continue to see that number go lower and lower.
Even in the face of some of the government panics, like Michigan, like Oregon, like California, the economy is coming back. I mean, everybody would love to have seen it come back a lot faster, but we are making progress back towards where we want to be. And All of that put together is good news. Continuing claims just about what the market expected, according to my numbers, 3.67 million continuing claims. Again, about 34,000 down from last week. And again, we're starting to get down into relatively manageable numbers for a change.
Well, we are, and I'm thinking that when the actual unemployment number comes out, that at the rate we're seeing things now, it might be a pleasant surprise also, and may actually get us down closer to that total 6% number.
Absolutely. And looking at it, remember what we learned a few months ago, that the unemployment number that they put out kind of measures mid-month to mid-month. So the last 4 weeks that we've had, which have almost all been good news, are what's going to go into that monthly figure that we see on the 1st of May. So we might actually be a little eager for the next couple of weeks to see what the government report says.
Well, that's true. As we continue to watch that as being one of our markers there to kind of gauge how the economy is doing. Since that number's come out, we've seen the futures actually go green and now back red again. So not sure how this thing's going to float out for the day, but it's bounced back and forth.
Absolutely. It's not bad news anyway. Good to have that. The one tidbit of news that's out that might affect the markets today was President Biden's Earth Day message setting a national goal of a 50% reduction in greenhouse gases by 2030. That's pretty aggressive. And I was flippantly saying with you before we went on the air, if anybody really believed it was doable, I would have expected that oil issues to be pretty much leading my big loser list on the futures this morning. The fact that they aren't, I kind of get the feeling that Wall Street's saying, yeah, sure, Joe, like that's going to happen.
Yeah, well, that's true, because that would definitely put pressure on oil prices. And so, and that's a lofty goal, even just under normal circumstances. So, yeah, it's trying to get everybody to buy into that. That's going to be a hard row.
Yeah, getting the policy implementation necessary to do that through Congress could be kind of like that biblical quote of a camel through the keyhole, right?
Exactly. You're so right.
It ain't going to happen, in other words. It's a really busy day on earnings season. This is the first really logjam day we've got of 500,000 different stocks reporting this morning. Let's go through the high points and see what the picture looks like, shall we?
Shall we? We shall. So let's look at, we've talked about airlines over, I think last week we had 2 airlines come out. So it looks to me like we may have the rest of them today. We have American Airlines. We have Alaska Air. We have Southwest Air. Those are 3 pretty big size airlines. Obviously, they've all lost money. I mean, there's no doubt that everybody lost money in the airline business, and we would expect that to be the case. And so let's look at it kind of line by line as best we can. American Airlines, they lost 1 cent more than expected. They have said that their cash flow turned positive by the end of the quarter. And so that was good, excluding debt payments. So it doesn't mean it was positive, but still they're trading up almost 3% after closing up 3% yesterday. So that's 2 pretty good back-to-back days for them from a stock standpoint. So let's go on down to Alaska Air. They lost $3.51 a share. That was better than expected by about 12 cents. Revenue came in above what was expected. And so that was good. They're seeing improved conditions, allowing them to achieve, again, kind of like American Airlines, positive cash flow during March. And so you can't fault them for that, doing well, up 1.5%. after closing up almost 3% yesterday. So, man, if you own airlines on Monday, you have had a pretty good run here. The last airline we're going to look at today, Dave, is Southwest Airlines. They lost $1.72 a share, less than the $1.85 expected. Revenue for them was basically in line. And they're still burning cash, but at a lower rate than what they have been, seeing some improvement in the quarter. They're up a little over 2.5% this morning after closing up a little over 3.5% yesterday. So it looks to me like, Dave, the airlines are on track to be doing well maybe even for the rest of this year as people get that vaccination and start getting on the airline and traveling more.
The world is pent up demand, and it kind of keeps the picture going from what you've been getting out of those top line numbers. That guidance is what the market is looking for this time, and if you don't have guidance, you get penalized. If you do have decent guidance, even if it's not necessarily a great report, you get rewarded.
That does seem to be kind of the factor, because everybody wants to know what they think's happening coming up. That does give some certainty to folks, even though it's just a best guess by the company of how they think they're going to perform. So that's the airline, which kind of indicates travel. So we have a couple other household names coming in. Equifax reported they had a much better than expected earnings, and they raised their annual guidance. They have a performance, a workforce solution for businesses. And so it helped their bottom line significantly. And they're actually trading up 9% this morning. They'll open up at a huge new 52-week high of $210 a share compared to $196 as their last 52-week high.
Wowzers. That was my leader on the winners list this morning.
I bet that's a pretty good sized jump for them. And then I have a retailer left and a home builder left. So kind of two different industries to look at there. Tractor Supply reported they had a great quarter. They were expected to earn about 97 cents. They earned $1.55, revenue above forecast, and again raising full year outlook for them. And so they're up almost 4% this morning, and they will open at a new 52-week high at the rate they're going right now. Also, the home builder, we had D.R. Horton come out. They're going up this morning, better than expected sales and earnings from them too. And they also predicted stronger full year revenue with the strong demand and low mortgage rates is really helping them move forward. They're up a little over 1% right now.
So the lesson for corporate CFOs that haven't reported yet is if you aren't saying something about guidance on your report, think of something, right?
That's right. Maybe you should. Now, I do have one loser. Let's at least put one loser out there. Sleep Number came out, the mattress retailer. They fell short of their sales forecast. Their earnings came in better than expected, but they missed on sales. They were impacted by supply chain issues, which must have been a big deal. So they're pretty disappointing this morning. They're down a little over 6%.
Ouch. That surprises me because I thought they were selling mattresses like chiclets for a while during the pandemic. I figured they were going to have a good report.
Yeah, I think so too. And maybe, quarters before this, I think they did. But maybe the supply chain finally caught up to them.
Might very well be the case. Resetting the table, kind of a recovery yesterday. The major indexes were up 45 minutes before we opened. Phillip, how are we looking this morning?
Well, we have gone back to a slight tinge of red. It's very slight. We've got the Dow down $8. You can't even hardly quantify that. You got the S&P 500 basically even right now, and then you've got the Nasdaq down a little over $12. So, man, there's just not much there in the red category at all. So we'll have to wait to see how it shakes out as the market gets closer to opening. On the other side, the commodity side, we see silver down 0.6%, and then we see gold down about 1/3%. And then crude oil, Dave, it's given up some this morning. It's still has a tinge of green to it. It's up 0.1% to $61.42 a barrel right now.
Yeah, but that is so much better than the 62 and 63s we were seeing earlier in the week, isn't it?
Absolutely. Glad to see it getting closer to 60.
Absolutely. I got no trend across the pond. Asian markets mixed, decidedly mixed, as a matter of fact, at the close earlier this morning. Hong Kong up by 0.5%. The Chinese composite was off by 0.25%. No trend there at the close. Europe is generally up fractionally midway through their day. Phillip, it's unpredictable as to what could happen day by day with your money. You and I are talking about it. It's flashing back and forth between pink and light green ink even this morning, even as we speak. That's got to make somebody thinking about retirement soon going, how do I make sure I've got my money handy for me when I need it? How do I find you to make that happen?
You're absolutely right, Dave. And that's not it. I've been reading several articles out there that, questioning how much further this thing could go and what's really and truly fueling it. And if earnings don't really line up this quarter, it could be a problem going forward. And if you don't know how much risk you have in your portfolio, then you just don't really know where you are. That's why I created the Financial X-Ray. Give us a call at 863-382-0037 to schedule your financial X-ray. Go to our website, statlerfinancial.com, and you can schedule an appointment through there. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And one more time for the week here tomorrow morning on Light FM. Phillip, thank you so much. We'll catch you then, all right?
All right, man. You have a great day.
Thank you very much. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Hey, folks, again, I want to thank you for joining us today. If you like what we're doing here, please share this with your friends and family. We'd like to get this thing up to 1,000 likes on our page at Statler Financial Services. Have a great day as we close out the week tomorrow. I look forward to seeing you again. Until then, take care.